For more on what founders and capital allocators are going to be doing to avoid this situation in the future, we want to bring in Sarah Kunst. She is founder and general partner of Cleo Capital, with investments including things like Masterclass and Gemini, which is the Winklevoss twins' crypto platform that's out there, too. Sarah, I know it was a very tough weekend. A lot of people trying to figure out what happened. Obviously, what the Fed has done, and with depositors being secured in all of these situations, has taken a lot of the pressure off. But I have to imagine that there are big changes that you are kind of talking to your companies about. What are some of those changes? What would you advise them to do differently next time around?
Absolutely. You know, tech will have a lot to learn from this incident. This was a crash course in treasury management that no one wanted. The historic advice, particularly over the last few years, has been focus on building your company, put your money in a safe bank like an SVB, and focus on building an outsized return for your investors and shareholders. And what was missed was some of that basic block and tackle around, having some redundancies in bank accounts, using sweep accounts. There was very little interest to generate on them, and no one was thinking about them as a hedge against a bank run. And I think a lot of that is changing and has already changed in boardrooms, in startups across America.
What happens just with this collapse of this bank, which was a very specialized bank that would make loans to some of these companies that other banks wouldn't? I would imagine it's going to be tougher to just find liquidity for some of these companies. Does it change the way that you invest? Do you think it will have limiting effects on the number of new companies that can be brought out?
I think very few venture investors have been actively investing, in new companies between the fall of SVB last Thursday and now. But I do think that that's something that, investors are going to be kind of shaking their head out of the fog of war and saying, hey, what do we want to do differently now? And I'm hearing that there's up to $70 billion in loans, primarily venture debt, that SVB had issued. And a lot of those people are going to have to find new lenders. And, we're seeing some big venture funds actually, lean in over the weekend. They opened up lines of credit for things like payroll for their companies. Some of that might stick. If you're an RIA, you might look at it and say, look, private credit's doing well. We know these companies better than anyone. Often they were being underwritten by SVB because, these big funds were nodding and saying, we led their last funding round. We anticipate we'll lead the next one. And so, we could see a whole new cottage industry spring up within some of these big funds. And I've also gotten a lot of inbounds from family offices who, are saying, hey, we have a ton of capital and we are interested potentially in providing debt facilities to these companies.